If you receive Social Security benefits, whether that is retirement, disability, or SSI, there is something happening inside the American banking system right now that directly affects the moment your money hits your account, and the overwhelming majority of recipients have no idea this is taking place. I want to be very clear from the start. This is not a scare tactic. This is not political commentary. This is not speculation. What I'm about to walk you through is a real, documented procedural shift that financial institutions across the United States are actively rolling out. And it is happening right now during a period when millions of Social Security recipients are already dealing with rising costs, tighter budgets, and very little financial margin for error. By the time we are done here, you will understand exactly what is changing inside the banking system, why it is changing, how it could affect the timing of your Social Security deposit, what warning signs to watch for, and the specific steps you should take right now to protect yourself and make sure your money reaches you without complications. To understand why this banking change is significant, you first need to appreciate just how critical Social Security payments are to the daily lives of the people who depend on them. There are currently more than 70 million Americans receiving some form of Social Security benefit. That includes retired workers who spent decades contributing to the system, disabled individuals who are unable to work due to serious medical conditions, surviving spouses and dependents of deceased workers, and low-income Americans receiving supplemental security income. These are not people collecting a bonus or a supplemental check. For the vast majority of them, Social Security is their primary, and in many cases their only, source of monthly income. Think about what that means in practical terms. When that deposit hits the account, it is already spoken for. It goes immediately toward rent or mortgage payments, grocery bills, prescription medications, utility bills, insurance premiums, transportation costs, and every other expense that keeps a household running. There is no backup fund waiting in reserve. There is no second paycheck coming in a few days. For millions of recipients, the Social Security deposit is the entire financial plan for that month. This is why even small disruptions to the timing or delivery of that payment can cause serious stress. If a person is expecting their deposit to clear at a certain time because they have a rent payment due, or because they need to pick up medication, or because a utility is about to be shut off, even a delay of several hours can trigger a cascade of problems. Overdraft fees, late payment penalties, missed doses of critical medication, and the deep psychological stress of financial uncertainty are all real consequences that flow from disruptions most people would consider minor. Understanding this reality is the foundation for understanding why this banking update matters so much. When we talk about changes to how Social Security deposits are processed, we are not talking about a technical adjustment that only affects accountants and financial engineers. We are talking about a change that reaches directly into the daily lives of some of the most financially vulnerable people in the country, and that demands a clear, honest, and thorough explanation, which is exactly what you are going to get today. Banks across the United States are in the process of rolling out updated processing procedures for incoming government deposits. Social Security payments, including retirement benefits, SSDI, and SSI, fall squarely within this category and are directly affected by these new procedures. Here is the core of what is changing. When your Social Security payment arrives at your bank electronically, your financial institution now runs it through an additional layer of automated verification before releasing the funds into your available balance. This is a new step that was not part of the standard processing flow before, and it represents a meaningful shift in how banks handle one of the most consistent and high-volume categories of electronic transfers in the country. What does this verification process actually involve? At a technical level, the bank's automated system is performing several checks simultaneously. It is confirming that the incoming payment originated from a legitimate government source. It is verifying that the account designated to receive the funds is active, properly linked, and has not been flagged for suspicious activity. It is cross-referencing the payment details against the account's existing history and transaction patterns to identify anything that looks unusual or inconsistent. And it is scanning for any signals that might suggest the payment has been tampered with, redirected, or intercepted at any point during the transfer process. All of this happens automatically, without any human involvement in the vast majority of cases. The system is designed to work quickly, and for most recipients it will complete this entire review process in a matter of hours. Many people will never notice anything different at all. Their deposit will appear in their account at roughly the same time it always has, and life will continue without interruption. But, and this is the part that matters, there will be a portion of recipients for whom this additional verification step introduces a noticeable delay. These are people who will check their account on their expected payment date and find that their balance has not been updated yet. The deposit may show as pending, it may not show at all for several hours, and if you do not know that this is a normal part of the new verification flow, that experience can be genuinely alarming. That is the situation we are trying to prevent right now. Knowledge is the difference between a person who checks their account, sees no deposit, panics, and starts making frantic phone calls, and a person who checks their account, sees no deposit, understands that the bank is still running its verification process, and goes about their day knowing the funds will clear before long. Let me also be very direct about one more thing. This change does not come from the Social Security Administration. The SSA is not altering your payment schedule. The SSA is not changing your benefit amount. The SSA is not adding new eligibility requirements or holding your funds for any reason. Your payment is still being calculated the same way, transmitted on the same schedule, and sent to the same account it has always gone to. The Social Security Administration's role in this process ends the moment they transmit your payment electronically. Everything that happens after that point, every step between that transmission and the moment the funds appear in your available balance, falls entirely within the banking system's territory. That is where this change lives. A question I know many of you are asking is a fair one. If the old system worked for years, why change it now? What is driving this shift, and why is it happening across so many financial institutions at the same time? The answer requires a brief look at what has happened to electronic payment fraud over the last several years, because the numbers are genuinely alarming. Electronic payment fraud has exploded. We are not talking about a marginal increase. We are talking about a dramatic surge in the frequency, sophistication, and financial damage caused by fraudulent attacks on the digital payment system. According to financial industry data, losses from payment fraud in the United States have climbed into the tens of billions of dollars annually, with government benefit payments representing one of the most actively targeted categories. Why are government benefit payments such an attractive target for fraudsters? Several reasons. First, they are highly predictable. Social Security payments go out on a fixed schedule every single month, which means bad actors can anticipate exactly when large volumes of money will be moving through the system. Second, many recipients are seniors or individuals with disabilities who may be less familiar with digital security practices, making them potentially more vulnerable to certain types of fraud. Third, the sheer volume of these payments, tens of millions of transactions occurring within a tight window each month, creates statistical opportunities for exploitation. The specific types of fraud that have driven banks to implement these new procedures include account takeover attacks, where criminals gain unauthorized access to a recipient's account and redirect incoming deposits before the legitimate account holder even knows what happened. They include synthetic identity fraud, where fraudulent accounts are established using combinations of real and fabricated personal information specifically to capture redirected government payments. And they include interception schemes that target the electronic transfer process itself, attempting to reroute funds during the brief window between when the government transmits a payment and when the bank receives it. Banks have been under significant pressure from regulators, from consumer protection agencies, and from their own internal risk management teams to build stronger defenses against these attacks. The additional verification procedures being rolled out right now are a direct response to that pressure. They represent the banking industry's effort to modernize its fraud detection infrastructure in a way that specifically addresses the vulnerabilities that have been exploited in recent years. It is also worth understanding that this is not happening in isolation. The broader financial system is undergoing a significant technological transformation. Payment infrastructure that was built decades ago is being upgraded and replaced with more sophisticated systems designed to handle the enormous volume and security demands of modern electronic banking. Social Security payments, one of the largest categories of monthly electronic transfers in the country, are naturally part of that upgrade process. None of this makes a deposit delay any less inconvenient if you are the one experiencing it. But understanding the reason behind the change helps put it in context. This is not bureaucratic indifference to recipients' needs. It is a genuine effort to protect the funds that millions of Americans depend on from a very real and growing threat. If you receive retirement benefits, your payment schedule is tied to your date of birth. Those born between the 1st and 10th of the month receive payments on the second Wednesday. Those born between the 11th and 20th receive payments on the third Wednesday. And those born between the 21st and 31st receive payments on the fourth Wednesday. These dates are not changing. What may change for some recipients is the time within that payment day when the funds become available in their account. If your bank's verification process takes a few hours longer than usual, the deposit that you are used to seeing first thing in the morning might not clear until the afternoon or evening of the same day. SSDI recipients follow the same birth date-based payment schedule as retirement recipients. The same general principle applies. Your payment date is not changing, but the window during which the funds become available within that day may shift slightly for some recipients depending on their bank's processing timeline. Supplemental security income payments go out on the 1st of each month. If the 1st falls on a weekend or federal holiday, payments are issued on the preceding business day. This schedule is not changing. However, because SSI payments are often going to recipients with very tight financial margins, even a same-day delay can feel significant. If you receive SSI, being aware that the verification process may add a few hours to your deposit timeline is especially important. If you have recently opened a new bank account or switched financial institutions and updated your direct deposit information with the SSA, you may want to pay extra attention around your next payment date. New accounts and recently updated banking details can sometimes trigger more thorough verification reviews, simply because the account's transaction history is limited and the system has less data to work with when assessing whether the deposit looks normal. This does not mean there is a problem. It is simply a factor to be aware of. The rollout of these new procedures is happening at different speeds across different types of financial institutions. Large national banks with significant technology resources may complete their upgrades faster and more smoothly than smaller regional banks or credit unions that are working with more limited infrastructure. If you bank at a smaller institution, your experience during this transition period may be somewhat different than someone at a major national bank. Again, this does not mean a problem exists. It is simply a reflection of the uneven pace at which technology upgrades move through the financial system. Understanding what is happening is only half of the equation. The other half is knowing what to do about it. Here is a clear, practical action plan that every Social Security recipient should follow right now. Specifically, confirm that your bank's routing number is correct. Routing numbers can change, especially if your bank has been acquired by another institution or gone through a merger or rebranding. Confirm that your account number is correct and that the account is still active. If you have closed an old account and opened a new one without updating the SSA, your payment may be transmitted to an account that no longer exists, which creates a much more serious problem than a simple processing delay. If you need to update your banking information with the SSA, you can do so through your online My Social Security account, by visiting a local Social Security office, or by calling the SSA's toll-free number. Be aware that changes to direct deposit information typically take 1 to 2 payment cycles to take effect, so do not wait until the last minute. While you have them on the phone, it is also worth asking whether your account has any existing flags, holds, or restrictions that could affect incoming deposits. Most accounts will have none, but if something is flagged, you want to know about it before your payment date, not after. Most banks offer free account alert services that will send you a text message or email notification the moment a deposit hits your account. If you are not already using this feature, set it up now. Having a real-time notification removes the need to constantly check your balance and gives you immediate confirmation the moment your funds clear. It also means you will know right away if a deposit is delayed, without having to wonder. Look at your bills and automatic payments that are scheduled for your Social Security payment date. If you have automatic withdrawals, rent, insurance premiums, loan payments that are set to come out the same day your deposit is expected, consider whether you have enough of a buffer to cover those withdrawals, even if your deposit clears a few hours later than usual. If you frequently run your account close to zero between payments, this is the moment to think carefully about that. A deposit that arrives 6 hours later than expected should not cause an overdraft, but it will if the account balance is already at zero when those automatic withdrawals try to process. Building even a small cushion, if at all possible, provides meaningful protection against this kind of timing mismatch. If your payment does not arrive by the end of your scheduled payment day, the right sequence is to first call your bank to confirm whether the deposit has been received on their end and is still in the verification queue. If the bank confirms they have not received the payment at all, then contact the SSA to verify that the payment was transmitted on schedule and to the correct account. Having these contacts ready in advance means you are not scrambling to find them while stressed about a missing deposit. Every time a significant news story breaks about Social Security or banking procedures, a predictable and deeply unfortunate thing happens. Scammers use that news as raw material for new fraud campaigns, and this banking change is already being exploited that way. Here is how it typically works. A criminal or fraud operation picks up on widely circulating news. In this case, the story about banks updating their processing procedures for Social Security payments. They build a scheme around that news because it gives their fake communications a veneer of credibility. They reach out to recipients via phone calls, text messages, or emails that reference the real news story and use it to create a sense of urgency. The messages take various forms. Some will claim that your payment has been delayed due to the new verification process and that you need to call a number or click a link to confirm your identity before the funds can be released. Some will pose as your bank and tell you that your account has been temporarily restricted and you must verify your information to lift the hold. Some will impersonate the Social Security Administration and tell you that there is a problem with your direct deposit on file and you need to provide your banking details immediately. Here is what you need to know with absolute certainty. The Social Security Administration does not call you out of the blue to demand verification before releasing your payment. If your payment is on schedule, it will be sent without any action required on your part. The SSA does not require you to confirm your identity over the phone or via email in order to process your deposit. Your bank does not send unsolicited emails asking you to click a link and log in to verify your identity in order to receive a deposit. If your bank genuinely needs to communicate with you about your account, they will send official correspondence through secure channels or ask you to call the number on the back of your card. They will not send you a link in an unsolicited email. The rule is simple, and it is absolute. Never share your Social Security number, account number, routing number, online banking credentials, or any other personal or financial information with anyone who contacts you unsolicited, regardless of who they claim to be, regardless of how official they sound, and regardless of how urgently they say you need to act. If you receive any communication that feels suspicious, hang up or delete the message immediately. Then go directly to your bank's official website or your SSA online account and verify the status of your payment yourself using official, verified channels. That is the only safe way to get accurate information. If you believe you have been targeted by a scam related to your Social Security benefits, you can report it to the Social Security Administration's Office of the Inspector General at oig.ssa.gov or call their fraud hotline at 1-800-269-0271. You can also report financial fraud to the Consumer Financial Protection Bureau at consumerfinance.gov. Taking the time to report these schemes helps protect other recipients from falling victim to the same tactics. It is worth taking a moment to step back from the immediate details of this banking change and look at the broader trajectory of where the financial system is heading, because this update is not an isolated event. It is one chapter in a much longer story. The American financial system is in the middle of a generational transformation. Payment infrastructure that was originally built in an era of paper checks and manual processing has been progressively replaced by digital systems, and those digital systems are themselves being upgraded and replaced by even more sophisticated technology. The pace of that transformation has accelerated significantly over the last decade, driven by the explosion of mobile banking, the growth of real-time payment platforms, and the relentless pressure of cybersecurity threats. For Social Security recipients, this transformation is both a source of improvement and a source of ongoing adjustment. On the improvement side, the long-term direction of these upgrades is toward faster, more reliable, and more secure payment delivery. The verification procedures being added now are laying the groundwork for a system that is better equipped to prevent fraud and ensure that payments reach the right people without interruption. But transitions are rarely perfectly smooth. In the near term, as banks roll out these new procedures at different speeds and integrate new systems with existing infrastructure, there will inevitably be some variation in recipient experiences. Some people will see no change at all. Others will notice timing shifts, and a small number may encounter temporary complications during the adjustment period. The best thing any recipient can do during this period is stay informed, stay proactive about keeping their account information current, and maintain open communication with both their bank and the SSA whenever questions arise. The financial system is complex, and it is always evolving. But recipients who stay engaged and educated will always be in a better position than those who simply wait and hope nothing changes. The Social Security Administration remains fully committed to its mission of delivering benefits reliably to every eligible recipient. The agency has weathered decades of technological change, and it continues to operate on a foundation of stability and accountability. That is not changing. What is changing is the technology that surrounds and supports the delivery of those benefits, and that technology is changing in order to serve recipients better, not worse. This is a legitimate concern, and it is one worth addressing directly. If your deposit is delayed due to the bank's internal verification process, and that delay causes an automatic payment to bounce or results in an overdraft, you have the right to contact your bank and explain the situation. Many banks will waive overdraft fees when the cause is a processing delay on their end, rather than an actual shortfall in funds. It is worth having that conversation, but you need to act quickly, typically within the same business day, to have the best chance of a favorable outcome. You can check the status of your payment through your My Social Security online account at ssa.gov. The SSA's payment schedule is publicly available and updated regularly, so you can confirm your expected payment date and verify whether your payment has been transmitted. If the SSA shows that your payment was sent and your bank has not credited it to your account, that confirms the issue is on the bank's end and your bank is the right party to contact. In most cases, no. The verification process is automated and runs its own course. The best thing you can do to facilitate a smooth process is to make sure all of your account information is current and accurate, that your account is in good standing, and that there are no flags or holds on your account that could complicate the review. Beyond that, the process will complete on its own timeline. I would not recommend making a hasty decision to switch banks based on this update. For most recipients, this change will be either invisible or minimally disruptive. Switching banks introduces its own complications, including updating your direct deposit information with the SSA, waiting for the new account to be verified, and the risk of a payment being sent to an old account during the transition. If you have an ongoing, serious problem with your bank's processing of your deposits that persists after this transition period, that might be a reason to explore other options. But a preemptive switch based on anticipated disruption is unlikely to be necessary or beneficial for most people. If you experience repeated and significant delays in your Social Security deposits after this initial transition period, that is worth escalating. Start with your bank. Ask them to document the issue and explain what is causing the recurring delay. If the bank cannot resolve it, contact the SSA to make sure your payment information is correct on their end. And if you are experiencing what appears to be a systemic problem with your bank's handling of government deposits, you have the right to file a complaint with the Consumer Financial Protection Bureau. Banks across the United States are actively rolling out new automated verification procedures for incoming government deposits, and Social Security payments are directly in that category. These procedures add a review step between the moment your bank receives your payment and the moment it appears in your available balance. For the majority of recipients, this will be invisible. Deposits will arrive on their normal schedule without any noticeable change. For some recipients, this will mean a delay of a few hours within their scheduled payment day. In rare cases, it could extend to the following business day, though this is not expected to be common. The Social Security Administration is not changing anything. Your benefit amount, your eligibility, and your payment schedule are all exactly the same. The change lives entirely within the banking system, and it is motivated by the genuine need to protect government benefit payments from the growing threat of electronic fraud. Here is your action list. Verify your direct deposit information with the SSA right now. Contact your bank and ask about their current processing timeline for government deposits. Set up account alerts so you receive immediate notification when your deposit clears. Review your scheduled automatic payments and make sure you have enough of a buffer to handle a same-day timing shift. And stay alert to scammers who will try to use this news as cover for fraudulent contact. Your money is safe. Your benefits are continuing. The system is working to protect you. What you need right now is accurate information and a clear plan, and you now have both. I am William, and this is Benefits Update Central. If this video gave you clarity and confidence about what is happening with your benefits, please take 1 second to hit the like button right now. That simple action tells us that this kind of in-depth, no-nonsense coverage is exactly what you need, and it helps other recipients who are searching for answers find this video when they need it most. Subscribe to this channel so you never miss an update. Ring that notification bell so you are the first to know when something changes, and share this video with someone you care about who receives Social Security, because the information in here could save them a lot of stress and confusion. I will see you in the next update. Stay informed, stay protected, and know that this channel is always here to make sure you have the truth about what is affecting your benefits.